Last week, we discussed two scenarios, right? Where one bounces higher before we go lower. And the second one was we kind of go down to, again, the 3,900 level, right? And we bounce up higher to finish the ABC wave before the next major leg is coming out. So let's kind of discuss what happened, right? This went down a little bit more than I thought it would. All it ended up doing is putting in an expanded flat. So that scenario that we talked about where we, bounce up to the resistance is still in progress, right? Whether you're bullish or bearish, I do think the market is kind of going to push up, right? Let's bring out this, downtrend line and kind of going to push up at least still 4070, 4080, and even 4100, right? And then we kind of have to wait and see, like, when it rejects, like, are we going to reject and coming back down to, retest prior level of support, right? Before we head higher to go up to that C wave? Or is this, right? Is the sell-off last week, like I told you guys, right? Given that we kind of putting in an expanded flat, it wouldn't completely be surprising if we bounce off. You can see we pretty much came down to the 0.618 fib level, the golden ratio, right before the market bounced higher. So again, even if you're bullish, I do think that a bounce into the zone will lead to some kind of rejection. You kind of have to wait and see, like, whether this rejection gets bought up or whether it will continue to, sell off to make the new low before it gets bought up. We discussed how regardless of what happens, the market will, I personally think the market is gonna go up higher to retest the 4,300, 4,400 level. And if you want to see the bearish versions, I discussed it last week, right? And I can show it to you again if you're super bearish and you want to kind of be like, this is where the B wave ended, then again, this is probably what you're kind of looking at, right? So again, this bounce could be your, your 1, 2, and if you fib it, right? If you fib it, your 3 comes down all the way to, 3,500, 3,580, and then your 4th makes a new low before this correction is done. So yeah, I still am not on the page that this is going to happen. I would want it below 3,800 before I even consider any bearish sequence. So yeah, I'm still watching this as the first scenario that's likely going to take place, but that doesn't mean that the correction is not over, right? I wouldn't be shocked, right? Given that this is a very like complex, like sideways structure, right? You can see that if I drew a trend line this way, kind of did bounce off of support, right? And if I drew a trend line this way, this is the upper channel. So it wouldn't be shocking at all if we just stayed within this channel, right? Fill this upper gap, move up to this fib level. So yeah, let's kind of see. Obviously, if we do break, right? If we like get rejected here and break below 3920, I want to say, yeah, we break below 3920, then it's very obvious we're going to come back and test this demand zone here. So yeah, they're kind of the levels I wanted to discuss. Next, let's look at the dollar, right? Dollar, again, we saw this rising wedge. All this done is gone sideways. So again, the dollar, going lower first, right? If it goes lower and it bounces, right? This is kind of what I'm seeing for the dollar. And that kind of aligns with the fact that, the market could come down to retest demand before going higher. But something I don't want to also, kind of don't want to also miss out on is the fact that this entire thing, right? This entire thing is your 1, 2. This is your 4th wave, and the dollar, kind of comes down for this 5th wave. So I wouldn't be surprised, right? That would kind of be the scenario if the market wanted to, continue bouncing higher like this. Then the dollar obviously is done, done with this upward thrust, and it continues to sell off. So yeah, I'd watch the 103 level. I would say if you wanted a more like important level, 102.6, I'd say, right below this, anything below this, right? Then the second leg for the dollar would be more unlikely, right? If it starts to go below this, then it's very likely, gonna do something in the sense that just has a bounce and then 3, 4, 5 to make the new low. So we had to, kind of map out the two potential scenarios. And the wicks also, you can kind of see that we again, I told you I don't like to use the wicks, but I do like using the dollar, but it is important to kind of see where the wicks is. And you guys know, we've discussed this trend line many times. We know this purple line is the long-term trend line, right? And you can see that right now it's bounced like 4 times off of 18, right? The next time it breaks 18, it's probably not gonna have a pretty bounce. So yeah, kind of keep a watch on this area, right? If Wix does come down and bounce off this trend line, right, you can see that there's kind of a channel this way and kind of a channel this way. If this channel holds, then we could have that one more leg down before higher in the market, right? If that channel doesn't hold, then we're very likely, gonna kind of chop about, right? And go like tag that upper high. Just wanted to point that out as well. With that being said, let's kind of look at this week's watch list. And the first stock on this week's watch list, actually, AFRM is kind of the fourth one, right? I just kind of wanted to go through AFRM. The reason for that, again, we know that this is kind of like Meta, right? Where this was an ABC before it bounced higher. So it does have a gap to fill at 16, and that's kind of all I'm targeting, right? I want to kind of see an ABC kind of wave, and we are, right? This is, again, a mini channel where this is kind of the downtrend for AFRM. So I want any, retest of 13.5 to hold and kind of fill this gap to 16, right? Even a $3 move on AFRM is like 15%. So that should make for a nice, move on the weekly contract. So it's kind of why I have AFRM on this week's watch list. If we are bullish, at least to push up to the 4,100 trend line, then I feel like AFRM could, bounce higher. So that's why I have AFRM on this week's watch list. And we have discussed, XLE in the past. And, we do know that it's gone sideways, it's broken down. Again, it's pretty much gone back up to retest support. So still, I want you guys to be aware that you can see the trend line is broken. So any bounce that XLE has, right, as long as it bounces and rejects 89, it's very likely headed down to this 76 level, right? So ideally, you would like it to break 84.5 and come back down to 76. And again, you can see it does have a gap to fill. So at some point, it's definitely going to break and have a massive sell-off. Does have a gap to fill kind of at 70. So below 80 right now, I'm saying below 86 probably hits to 84, then 82, 80, and so forth, so on. Any bounce, make sure it stays below 90. 90 is the level you want XLE to definitely stay under, because if it starts to break over 90, then it's not, playing out this pattern. So yeah, keep an eye on it. With that being said, let's just kind of look at oil and see where we are, right? Even oil, we saw that it went sideways, it broke down. We're still, right? You can see since November all the way to March, that's 4 months. 4 months, oil has chopped. So it is due for a very big move soon, up or down. So yeah, again, let's kind of discuss, right? Even FSLR, I'm glad I kind of discussed the bullish version, because what did FSLR end up doing last week? It ended up, bouncing off this trend line and pushing a higher up to earnings. But right now, as you can see here, right, it's pushed up right up to the trend line. So, I mean, I would technically try to take a short off of this, right, with a stop at 215. So it's not impossible, right, for XLE also to move back into the trend line, right, and pop to the top of the channel before it comes down. But yeah, again, technically, the most important level, it needs to break, right? If you're a long-term short, kind of want to hold it for a few months, I would say this 83 would kind of be the most important level. So yeah, be aware that if it does, again, let's go back to the chart of oil. Depending on which way this breaks, XLE is going to move the direction, so you can play it both ways. So let's kind of look at the next one, which is NVDA, right? And NVDA, again, on the weekly, you can see this is the weekly trend line. It's kind of been hugging it, right? For me, again, personally, this was a gap fill, right? We filled it, and it does have a second gap to fill around 256. So I'm thinking, depending on what SPX does, it's going to do one of two things, right? It's either going to reject this upper level of resistance psychologically around 245, come back down, right, to fill this gap around 200 before it bounces higher to finish off this pattern, or if SPX wants to go through the bull pattern, right? What is NVDA going to do? This is tier 1, 2. It's very likely going to go up to fill this 256, 260 gap before it comes down lower, before it has this fifth wave. So either way, it's either going to bounce off of this and reject, or it's going to reject off this trend line. So I just kind of wanted to, bring this to your notice on potential, areas that it could be a short. All right. The last but not the least I want to discuss is CVS. And the reason for that is kind of had multiple trend lines, multiple channels, right? We are coming up into this level of support that it has not broken since June of 2022, right? So as long as it stays over $80, it is very oversold, right? Let's go to the RSI of CVS. You'll be able to see that CVS is, right? It does have bullish divergence forming and it is below 30. So whether you're bullish or bearish, I do think it's going to bounce to 87. So yeah, keep an eye on CVS. It could do some things this week. All right, guys, thank you so much. Have a great day.